Hello everyone, welcome back to the Forex Bot Trade Academy. Victor with you as usual, and today we are looking at the euro versus Japanese yen currency pair and the potential downtrend. Before we start, I would like to remind you all the information in this video is just for educational purpose and should not be considered as a financial advice. Moving back to our previous ideas, which was Australian versus Swiss franc and Australian versus Canadian dollar. Australian Swiss franc, the entry at this point, currently it is in profit. You can see there was a spike yesterday, price went down. I think it was a stop loss kick out move, but overall the idea is valid. We still expect this uptrend to continue, so that's perhaps will start today or tomorrow. So I gave this idea about 3 days, so we will see how it goes. So far it's a small profit, and if you really want to secure the account, it's always best to place the stop loss at the break even, because this makes it a very conservative trading. But it's up to you. The hard stop loss remains below 64.20 and we are still expecting the uptrend. Australian Canadian dollar, the entry was at this point 93.40 level, so now it's getting into the profit. It went also lower. We can see a few spikes produced, but still expecting the uptrend to continue. Downtrend trend line was broken at this stage, and yes, today we might see the rally, but also it is possible that consolidation will continue for another day. And moving on to the euro Japanese, this is the idea for today. On the euro Japanese yen, we have quite a nice bearish divergence right there. You can see the RCI went lower, price went higher. And after that, what happened is that we broke one trend line and then we broke the second trend line. Then price corrected up and there was a clean rejections of 200 simple moving average. What also important is that price rejected 68.2 pips. There was a spike produced, another spike, but failed to close above the first spike. And this means that the resistance has been rejected, the Fibonacci, along with the 200 simple moving average. And this brings me to conclusion that the downtrend is likely to start, or should I call it a correctional wave to the downside. If you remember, we were speaking about the Swiss franc Japanese yen. So these currency pairs are quite correlated, and we might see Swiss franc Japanese yen moving down too. But here, the ideal entry point would be at this price, basically 121, which is key psychological resistance. I would expect price to raise back to this area between this resistance 121.70 and 120.95. So this is the area for shorting, because only there it will provide 2-to-1 risk to reward ratio, because our target here is 117.55. So why this is the target? Let's move to the daily chart. On the daily chart, I have applied this fibs basically from this high, because there was no breakout, to this low. And here we have basically the 38.2 fibs at this level. Besides, we have 88.6 fibs at the resistance, and if we zoom it in, we can see that the resistance has been rejected cleanly at this stage. Spike produced, but then no closing price was above this spike. So this resistance plays the key role, the resistance area, and price might get back to this level once again. But overall, it's a downtrend already begun. Now we have these two support and resistance level. Moving back to the 4-hour chart. And here you can see that 88.6, 61.8% fibs, they correspond to this level. This is the key resistance. Price might get, I think in the worst case scenario, there might be a spike above 122.11, where the moving average was rejected, but the hard stop loss above this level. We can also see that there was Fibonacci applied to this corrective wave up, because this is the point where the previous resistance has been rejected. This is a point of correction after breaking this first initial trend line, and we can see that it corresponds to our target, where is 1327.2% Fibonacci retracement. So this is our target, but it is too early to enter, although it possible if but the risk reward ratio will be obviously not so good. So the best, this is the area of entry, wait for the pullback and then only initiate the trade. So that's it, guys. Hope you enjoyed it. As always, I would expect likes if you agree. If you don't agree, comment, ask questions. We can discuss what's happening in the market. And we had recently a discussion basically that the idea should provide the alternative scenario. Only the break and close above this level on the 4-hour chart would invalidate this bearish outlook, and price is likely to move to produce this double top and potentially even where uptrend might continue. So only the break and close above this point of rejection, which is previous resistance, can do that. But till that happens, it's the correction down should be expected. That's it, guys, for today. Thanks for watching. We'll talk to you tomorrow, hopefully, or day after tomorrow. Have a good day and, of course, a profitable trading to you.